Welcome back to another episode. Today we're going to take a closer look at the e-commerce giant and the clouding giant Amazon. More specifically, we're going to take a closer look at recent updates that have happened in the past few weeks. We can see, unfortunately, right now Amazon is sitting at $82, down 1% as I am recording. In the past 5 days, the stock is down roughly 4%. In the past month, it's down over 12%. Year to date, unfortunately, the stock is down roughly 52%, but we do know that there's probably plenty of bulls super excited with the stock price action right now. As we can see, the current market cap is $841 billion. So let's get started with today's episode.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
So like I mentioned, today I want to take a closer look at recent updates happening with Amazon. First, I want to start off with their AWS side, right? I do believe this is where a lot of bulls have a lot of great bullish thesis. So a lot of great news happening in the past 3 to 4 weeks. First, we're going to start off here on December 19th. We see that the US Navy awards AWS contract worth over $700 million. So a great contract there, right? I don't want to say this is anything that would move the company's stock price much, but it just shows the overall strength of their AWS. Kind of seeing earlier on December 7th, the Pentagon awards a $9 billion clouding contract to Amazon, Google, Microsoft, and Oracle. Again, this is more of a split contract and they still kind of have to fight for certain workloads, but we can see another nice amount of money coming in for AWS. Another one we have here is Yahoo selects AWS as its preferred public cloud provider for its ad tech business. Again, this is more, I want to say all this is great news for Amazon, and it just shows the overall strength of their AWS side. The final AWS news that I have is one that's more on the consumer side. So for those that are not familiar, Avatar: The Way of the Water was rendered using Amazon Web Services. And this is pretty interesting because normally the company that renders is Weta, and they have their own data centers. But because Avatar was such a huge movie with so much computational power needed, their own data center, which is it's no slacker, was unable to do it. So they had to go with AWS instead. So it just kind of shows the strength that even companies that have their own data centers still need to use companies like AWS for certain solutions. So now I want to take a closer look at some of the live streaming and some of the consumer content products that they are releasing. But if you are enjoying the episode so far, make sure to hit the thumbs up, as it does help me grow my overall market and overall audience. And if you want to support a little bit more, make sure to subscribe using my link at fool.com/Jose. Finally, I do have a new channel where I pretty much just do an overview breakdown of how a company makes sales. The first one obviously had to be Nvidia. Make sure to subscribe. The link is here above or below. It's about a 5-minute video kind of explaining the products and the segments that they make. So here we can see on December 16th, Amazon and the company that creates Warhammer. For those that are not familiar with Warhammer, this is a very popular franchise in the fantasy gaming world, right? There's a lot of gamers, a lot of board gamers. I personally never played the game, but I have heard a lot about it. And if you go looking at books and stuff like that, you would definitely see this series around and in the video game segment as well. So Amazon now has the ability to develop films and TVs for this series. I do believe they have a lot of great stuff planned. They have a lot of great actors already lined up for casting, it seems. So again, nothing that would move stock price, but it just shows that, hey, this is a company that is developing new originals to kind of drive more people to its services. Pushing into this, Amazon, they do have a gaming service, Amazon Games. Amazon Games at the moment has only developed their own games, Lost Ark, and I forget the other one, but they have now agreed to be the developers and publish the next major entry in the iconic Tomb Raider series. Tomb Raider is definitely a huge kind of game in the gaming market, and for them to be developed by Amazon Games, it just shows the overall strength of this developing company. So that's pretty interesting. I personally would wish Amazon Games was its own business. I probably would invest in it by itself, but we can see it's a great move for Amazon Games. Next, if we take a closer look, Prime Video tweeted that God of War is coming. God of War is another kind of very popular gaming series, and now it's coming as a TV series on Prime Video. So again, all these, I want to say, are ways for Amazons to grab other users, the gamers, to come to certain of their platforms for live streaming and for shopping. So I think it's a great move, and it just shows the overall strength that Amazon is doing. Now, kind of pushing a little bit into their advertisement side, we know the advertisement business has definitely grown for Amazon dramatically in the past few years. I do want to say this is a market that I expect to grow really fast when the kind of advertisement wallet becomes less conservative. Obviously, with the overall macroeconomics happening right now, the advertisement wallet is a lot more conservative. They're a little bit more hesitant on purchasing more ads or spending too much money. But I do believe when that changes, Amazon is going to win, and they're continuing to improve their solutions here. For example, Amazon Ads now allows Shutterstock to kind of partner up with them to create better, higher quality advertisement solutions. So I think that's a great move. It kind of just shows them improving their ads market. Next, we have Amazon trying to roll out TikTok-like shopping experience in social commerce push. So if you are on their app, it should already be in some of the United States customers, where you can kind of now, if you're looking at a product, you can see more videos, more pictures about it, kind of add a more social engagement before purchasing a product. And that seems to add or increase the overall customer acquisition rate. So we can see even big players like Amazon are trying to copy TikTok one way or another to overall improve their solutions. Next, we saw that recently on December 26, MasterCard report showed that the United States retail sales grew 7.6% in holiday season. This is between November 1st and December 24th. I do want to say this is probably better news for companies that deal with transactions and not actually own the items. The main reason I do believe retail sales have grown a nice amount is there have been a huge amount of discounts in products. And what's going to end up happening is those products, because of the huge discounts, they are obviously making less margins, if they are even profitable at the moment, as many companies are trying to correct their over inventory. But I do believe if you're a company that depends on transactions, it doesn't matter if the business that is selling is making less money. If the transactions are bigger, obviously you make a bigger fee. So it depends on where you see Amazon being in this front. I know they do a little bit of both. They depend a little bit on transactions, and they also have their own kind of first party items that they sell, and most likely those items might be selling at a loss. So Amazon is a mix there. The other final news I have is Amazon. Here we can see on December 27, Amazon weighs disposing of excess air cargo space on pandemic recovery. So during the pandemic, right, we did see that Amazon and a lot of e-commerce solutions were highly needed. So Amazon and a lot of these companies started to invest in a lot more things, like I want to say distribution centers. We see here the air cargo space. Now that the slowdown is happening, a lot of that investments they see might have been too much, so they're trying to pull down. Amazon, for one example, maybe they leased too many airplanes earlier on last year, and for the upcoming maybe end of the contract, they might not lease as much. So I don't think that's too much of a bearish news for Amazon in the long term of things. In the short term of things, it could definitely kind of impact maybe margins a bit. The final news that I had actually here is Amazon continuing with the overall cost savings. They are delaying new hire start dates in latest efforts to tame headcount, and this came out in early December 12th. So again, we are seeing even big players kind of if they're not reducing workforce, they are reducing the amount of hiring, and now it seems that they're also kind of delaying when that hiring process starts. Overall, calming headcount, but at the end of the day, it's mainly to save money, right? They are going to have to pay those employees at a later date if they start at a later time. So hopefully you enjoyed today's episode. Take care, have a good day, and see you next time.